Look, we all want a simple strategy, one that's easy to replicate and something that will stand with the test of time. Is there really a strategy out there as simple as looking at the 1 hour chart and then entering on the 1 minute chart? Well, that's exactly what we are going to do in this video. A beginner trader by the name of Harry James, he's shared a strategy that he uses in his video. But bear in mind, this strategy he's using on a backtesting platform called Tradezilla. So whatever figures he's shared is not on a real account. So the emotions behind trading this strategy isn't going to be there. However, if you've tested it enough times, which is what we do on this channel, then when it comes to executing on live market, it should hopefully perform, right? So as usual, let's do a example to get started with the video. In front of me, we have the 1 hour chart, and then we have on the right hand side, we have the 1 minute chart. This specific strategy, it is simple because what you're looking for on the 1 hour chart is simply the direction of the previous candle. So if I was to log on the computer and decide that it is currently 10 a.m., I'm going to be looking at the previous candle, which was the 9 a.m., which is this one. And as you can see, it's bullish. That is my bias. I am very simply looking at the previous 1 hour candle to decide what my bias is. Now that I have got my bias, that I am only looking for longs or buy opportunities, this is where we jump onto the 1 minute chart. And on the right hand side, you can see that we are in the London session. And what we're simply looking for is price to break the high and continue going up. So this is where Harry mentions this is a continuation trading strategy. So in order for me to enter this trade, I need price to break above here and then place my stop loss below here. What we want to bear in mind is Harry uses higher highs, higher lows. What I'm going to use on this video is external high, external low, internal high, internal low. Let me explain. External high is the swing high, and what I want to do is just make sure that it doesn't copy across to the higher time frame. This is the external high in the 1 minute chart, and this is the external low of the 1 minute chart. Anything in between that is all internal. I'm not interested in that. I want to make sure that it breaks the high because we're looking for longs. So very simply, what I can do is I can come in, look at this and be like, okay, well, I'm waiting for price to break above here. Let's put a buy stop in there, stop loss below here, and we're going to go for a 2-to-1 reward to risk. Okay. Once price reaches a 1-to-1 reward to risk, we're going to move our stop loss to break even and let the trade play out. So let's see what happens. Does it tag us in or not? And you can see that price at this moment is fluctuating internally of the external high and external low of the 1 minute chart. I don't care about this. We shouldn't care about this. So what would happen if price breaks below here? Well, we'll find out if it does or not. Does it tag us in? And you can see that price did break below this external low. So what do you do in this situation, given that the price has broken this external low? Well, now it's telling me on the lower time frame, bearish momentum has taken place. So I need to see some bullish momentum, or else my bias will switch to bearish. But at the moment you can see we're still bullish because the hourly candle hasn't closed yet. So let's get rid of this for a second, and we will of course wait and see if we can get a new external position. And you can see that right now we have, because look, the previous external low was here. That low has been violated with this. Let's move this across. And where did this low start? It started where? Here. Because that was what broke that low. So now that is the new external high and the new external low. We're still bullish. So that means that we are actually looking for what? Price to violate this high here. And if it does that, then we want to be tagged in. Because even though this candle is of course bearish, we're getting buying pressure with a wick. Whenever we see a wick, that tells me that we have got buying pressure, because price was bearish. Now we've got buying pressure coming in. Where do we place our stop loss? We place it at the external low here, and we're going to go for a 2 to 1. There you have it. So let's see what happens. Okay, you can see we have now been tagged in. And then once price reaches a 1 to 1 reward to risk, which it has here, let's see. Has it reached? Yes, it has. You can see we can now move our stop loss to break even. And we can just let the trade play out. Now, it's either going to stop us out, or it's going to win the trade. Let's see what happens. You can see at this point, we won the trade. So that was just an example to share with you. Now the real test begins, because as simple as this strategy looks, you can see there was a few things that we had to consider. The external highs, the external low, and anything in between we had to ignore. So there was a lot of waiting around. This is a replay, but in a real life scenario, you have to make sure your emotions are in check. So let's get down to it, guys. Random bar, get rid of the drawing, and you can see as of now it is 10 a.m. here. We have got bearish momentum to the downside. What are we going to be looking for? We're looking for a bearish bias. So now that we have got our bias sorted, what we're looking for now is external high, external low. So we can see from here that this was a previous low. From there to here, yep, from there to there, and that got violated. So what did it get violated by? From the start here to there. So all we're going to do is we're just going to mark it out like that. Get rid of the sync. Okay. So what are we looking for now? We are very simply looking for a low to be violated. And at this moment in time, we need to wait for the new hourly candle to form, which is going to be at 11 o'clock. Okay. Which hasn't happened. There you go. Okay. So at this point, the candle is starting to print, and what we're looking for now is, let's move. You can see that price hasn't quite broken that, has it? You can see that it hasn't broken it. So that's telling me is that there is bullish pressure coming in. So would I enter this trade? No. So we're going to wait, because at this moment in time you can see that price, if we move this across, has broken above. But now that price has obviously broken below that, now we're going to have to wait. And let's see what happens. Okay, so price is going lower, and we're not obviously in the trade yet. And you can see that price has now created a new external low. And at this moment in time, if the price is going to continue to go lower, at this point is where I'll be looking to enter the trade like this. Stop loss below, stop loss above, target like this, and let's see what happens. Okay, you can see there's bullish pressure. There you go. So now that we have got bullish pressure coming in this situation, and this hourly candle is about to, of course, close bullish, my bias has now changed. So my bias is going to be bullish now. I'm no longer bearish, but we need this candle to close first. So let's get rid of this. You can see the external high here that was there has been broken. And now what we're going to do is we need to wait for the new hourly candle to print. And you can see prices going higher. There you go. Oh, now that must have been some kind of news, but I'm just going to take it back for a second. There you go. And obviously we saw that something happened here. Well, we're going to continue with our train of thought as we go along. So okay, that was way too sharp, and we couldn't do anything about that in this instance, because that was some kind of news that would have come out. And let's say, for example, at this point, if you hadn't let's say if you had gone through this like this, so you can see the external high and low, and then you waited for that situation for the price to open, and you had put in a trade here, and with the external low as your stop loss, and you went for this, then most likely, of course, you would have had a news reaction, something like that. Yeah. So part of the strategy, it looks like you got to make sure that you don't have any major news coming out. But you can see that we did have one here, interest rate decisions. That's some major news. So what you want to make sure you do is avoid that, just to keep your losses minimal. Okay, so now that we have got this situation, what is our bias still? Our bias is still bearish for the 1 p.m. candle that's going to be opening up. So we'll just wait and see what happens for the next candle. Okay, new candle's about to, okay, there you go. Okay, so you got new candle. Are we still bearish? Yes, we had a bearish close. We have got a bit of a wick, strong wick to the upside, but overall we are still bearish, and we're looking for a bearish entry. So we need to make sure the external high and low are marked out, which is from there to there. That is quite a big trading range. Anything in between is all internal. So what we're looking for is we need price to, of course, break below here. It is tempting when you look at it and you think, well, could we trade in between here? Ideally not, but If you do that, then there may be a chance of getting stopped out, but that is up to the trader themselves. I'm just gonna wait for one of these lows or highs to be violated, and you can see that now what's happened is that price is actually turning quite bullish now, but it is again trading within this range here. So until one of these breaks above or below, we can't really say it's a continuation because we've got consolidation happening. So that would be something that I would of course avoid. Let's now go to a different random price action. Okay, and you can see that clearly we're on this uptrend. Price is of course consolidating sideways, so there isn't really a continuation, and trading this is gonna be crazy. You can see price is just, it's going up slowly, but it's going sideways, up, sideways, then up, sideways, then up. Do we really want to be trading that? Let's say you want to trade it for the argument's sake, okay? Overall, let's choose bullish. Now let's identify external high and low, which is going to be this one here. So in order for me to enter this trade, what do I need to see? I need to see price break above that. Now that we're in Asia, this could continue to consolidate. Let's say for argument's sake we're bullish and price breaks above that. Now the stop loss is going to be massive. It's going to be something like this, and we're going to go for a 2-1. Now this is for you lot that are just so impatient and want to get into a trade. There you go, we entered the trade, we are in the trade now, and if we can get a 1-to-1 reward to risk, which is about there, just see if it tags us in. I mean, well, we're tagged in already, but if we can reach it, yep, we reached it. And what we're gonna do is move stop loss to break even trade, and we just let the trade play out. Okay, and it stopped us out, but it's a break even trade. It's not too bad. We've actually reached, how far did we reach? Let's have a look. How much was that? Okay, that was, yeah, 1.65. That wasn't bad at all. Okay, so now that that's break-even trade happened, can we enter again? Well, at the moment, what's the current 1 hour candle? It's showing bearish, so we need to wait 3 o'clock. So let's wait till 3 o'clock hits, which again is 3 a.m. guys, bear that in mind. Okay, now it's opened up. So what are we at the moment? At this moment in time, we need to identify external and high and low. So the low that was broken here was broken by which one? By this high to this low. Okay, mark that up. So in order for me to enter the trade, I need to see this low violated, and if that happens, let's enter the trade. Stop loss above, and we go for a 2-1. There you go. Okay, let's see what happens. Do we get tagged in? Yes, we get tagged in. Does price continue going lower? No, it's going sideways at the moment. And we look like we've got some bullish momentum. Yep, got bullish momentum, and we got stopped out in this respect. Okay, that's fine. We try to look for another trade. Now the problem with this is GBP USD in Asia, it will go sideways. So in a real case scenario, I wouldn't be even trading in Asia. But for the purposes of this video, because we're backtesting, this is what can happen if you trade in Asia, especially a non-Asian pair. Okay, so we're bullish at the moment. Okay, we're bullish, and let's see the new 4-hour candle. I mean, so the 1-hour candle, which is at 4 a.m. Okay, and taken an L, and price is at this point. So let's just take it back for a second, because you would be waiting for the next candle, because a lot of you that have just taken L will be revenge trading and looking to re-enter your position, right? And I guess that's one of the beauties about this specific strategy is if you get stopped out, you can look for another trade based on that 1-hour candle. So right now we can see there's bullish momentum, and we want to be looking for longs. And in internal and external, which one is it? You can see that this high here got violated from the beginning here to there. So let's mark that out from there to there. Okay, and what would get me to enter this trade if price breaks above that? So let's go long, and of course we already know price just go up because we saw it just earlier. But I want to see if we can hit a 2-to-1 with this or not. And you can see that price doesn't hit 2-to-1. So for this specific strategy, if you want to be getting a higher win rate, then don't trade the Asia session, because you can see clearly that we've had 2 losses already, and price does tend to go sideways in Asia anyway. So let's go to this, and let's find some random price action that's not in Asia. What time is this? This is 8 p.m, which we don't want, and this is 9 p.m, which we don't want as well, and this is about 5 p.m, which isn't bad. So let's look at this. So price bearish, bearish. You can see wick to the downside, bearish. Okay, so what we're looking for, we're looking for price to be on the downsides. But the only issue with this is we've got this inside range price action where we're inside the previous hourly candle, which is this one here. So we could be in a consolidation if price doesn't go down for the next hour. So let's see what happens. Okay, let's wait and see. Okay, okay, so now we are at 6 p.m. It's a Tuesday, and what we're looking for, we are looking for price to break the low of that 1-hour candle, which is here. Let's just mark that out for a second, which is this one here. We need to see that break. Price broke that high from here, then broke this high from here. Okay, and the start is here. You can see price is going sideways. I don't actually like this, so I'm just going to refrain from trading that. Let's get another random pair. Okay, so again another random pair at 9. I don't know why it's showing it at 9 o'clock. Try to find something a bit more earlier. 9 o'clock again. Okay, this one's at 3. Okay, perfect. You can see price is on a strong bullish momentum towards the upside in the New York session. Okay, no problem. So in order for me to continue to take this trade, price needs to break above this high here. That looks simple, much more than what we saw earlier. And you can see that price We're waiting for the next hourly candle, which would be somewhere around there. Okay, so that's the current candle. We're waiting for 4 o'clock for the next one, so I wouldn't actually enter yet. I need to wait for the price to print the new candle. Okay, it's about to print. Okay, now we are on the new 1 hour candle. Price broke below here. There you go. This is all internal. Then price from here broke above there. And so now that we have our 1 minute swing high, swing low, we are going to now place an entry. Put buy stop there. And let's see what happens. Okay. Okay, there you go. We are in the trade. Let's get it to 1 and then move to break even. 1 has hit. Let's do the break even. And we got tagged out. Okay, no worries. That's a break even trade. But the method behind entering, it does seem quite simple. It does look quite straightforward. We're just identifying the previous candle, we're waiting for it to close, and then we're jumping on the hour of the new candle opening. We're not waiting, we're just having a look, put a buy stop or sell stop, and we enter the trade. So it does look quite simple in that sense. Okay, we got stopped out of that. No worries. Let's move on to the next trade now. So now that is obviously bearish, we've got a bearish candle. The only downside is that even though this is obviously bearish, and this is a new candle that just literally printed, we're still bullish. It's because if you have a look, you'd be seeing this and you'd be waiting for the new candle to form, which is here, yeah? So if that was the case, you would be still looking for buys, right? Even though we got stopped out. So we obviously got stopped out there. So how would we identify if this was a new trade to enter? We're waiting for this external high to be violated. And then what we would do is we would put our entry there. But of course that didn't happen because we did get stopped out. And you'll see, there you go, we got stopped out. So we're still looking for buys, but we're also looking at, okay, well, which one are we looking for to enter the trade? So this low, this external low got violated here, but where did it start? There. So let's just have a look. There you go. So if I was to be bullish in this instant, in order for me to take another trade, it'd have to be here, something like this. And if this breaks this low, then I'm not tagged in, obviously. Okay, so it's broken it. I have to, of course, move this external high and low to here. In order for me to enter this trade, because I want to see it being bullish, it would look something like this. No. And it, of course, never came. So now that price seems to be breaking these levels. Let's move that across. And if we get a break above, then I'll enter the trade. If not, I won't. There you go. Buy stops in place. And let's try again. There you go. I'm tagged in now. You can see. And let's see what happens if this breaks above. Another entry could have been is you could have waited for this to break above. That would be your new area, and then you could have placed an entry like this, stop loss below here, and then you could have entered there. Obviously we already tagged in, and let's see what happens in this instance. Okay, price is now moving sideways, and it does look like we're gonna get stopped out. And shockingly, we haven't been stopped out yet. We almost got stopped out here, but it never took that low. And let me just make sure it hasn't reached one. It has. We have actually reached 1.42, but usually when it's a 1-to-1, we move our stop loss to break even, which we can. And let's see what happens. And we got stopped out. Okay, no worries, we got stopped out there. So far, in terms of the session, if you trade this on the higher volatility sessions, it's much more better than the Asia session because you get good volatility, and the chances of price continuing is a lot higher. So at this moment in time, let's just get rid of that. You can see that price is consolidating in between that candle. That's all consolidation. So at this moment in time, there's no point trading it. If price is going towards the upside, some of you guys might decide, well, if it breaks above that, price is going to continue to go higher. But obviously right now I don't really like price going sideways, so let's just get another random. There you go. Okay, this is at 8 o'clock, end of the day almost. Okay, 5 a.m. but we're in Asia at the moment, so London session is about to, of course, be open. 6 a.m. still Asia. Let's let this roll on a different day. There you go. Now it's going sideways. Nope. I don't want to be doing test on sideways motion. It's just giving me 9, all 9s. This is 1, it's Asia. Not very helpful. 9 o'clock again. Loves the 9 o'clock, doesn't he? Okay, this one is 6 p.m. So it's towards the end of the day, of course. Do I really want to be trading towards the end of the day? Not really. I want to be trading towards start of the day. 3 a.m. Asia again. Not being very helpful, this replay tool. There you go. What's this? 8 p.m. 9 p.m. There you go. Okay, so that's somewhat better. We've got a 3 p.m. Okay, so we jumped on, looking at the chart, 3 p.m. we're looking at it being bullish. So if that is the case, it's bullish, then we're looking for potentially bulls to come in and go higher, right? But we need to wait for the 4 p.m. candle. So let's wait for that and see what happens. Okay, so at this moment in time, we are bullish. Why? Because if you look at this specific candle, it's got very little wick to the downside. If it was more than 50% of the body, then I would have suggested that we're going to go towards downside, but it looks quite bullish. Let's identify the internal and external highs and lows. So which is, you can see, in order for price to shift, we need to see price break above there, but we hasn't done that. So now that price has obviously done that, we could have actually put a buy stop there before it broke. And then we would have played something like this. So it would have been, oh, oh well, I got rid of it. I accidentally pressed the random bar again. Great. Now we gotta figure it out again. Let's get the random bar again. Okay. Okay, that's Asia in a second. This replay tool is really enjoying itself. Evening sessions or Asia sessions. It's 3 a.m. Asia. I don't want to be trading Asia. 8 p.m. end of the day. p.m. I wonder if it gives me this paper date. No. I want to keep this completely random. I don't want to be choosing a time or date that I've already seen the candles in that direction. 8. Okay, so I do like this one because you can see it's 4 p.m. We are, of course, bearish, so let's wait for the new candle. Okay, there you have it. So you can see here, previous candle was a very strong bearish candle. We are just looking for bearish signs. So external, internal, highs and lows. Where was it? What broke this low here? We move across. Was here. Where did it start? From there. There you go. So very simply, I want to see price go to the downside, and what am I looking to do is going for a short. Price above the previous high here, and we're going to go for a 2 to 1. Let's see if we get tagged in or not. We get tagged in, price is falling, and I need to, of course, check if it has reached 1 to 1. It has. Price to break even, and let's see what happens. And you can see we got tagged out here at break even, and price continued to obviously go to the opposite side. Didn't quite come and take your stop loss out, but most likely it probably will. See, it's just going sideways. Oh well, so far I have noticed from this back test that price doesn't quite reach a 2 to 1. It does reach a 1.5R. That could be something maybe looking to change towards, but the purpose of this video, I'm just going to be sticking to the 2 to 1. Let's randomize it again and try to find one that doesn't consolidate. Ideally, I want to see price in a strong move, like something like this. Price broke above that, but I don't want to be jammed in here. Okay, let's see. Price is still okay. What about here? 6 o'clock. Let's wait for 7 o'clock. But the only issue is towards the end of the day. Okay. Okay, so new hourly candle printed. Did that low get violated any time? Not yet. So we need to wait for that low to be violated. and that would signal me a continuation. Let's see what happens. There you go. Price did, of course, break. Did it reach a 1-to-1? Not quite 1-to-1 yet. Nice, reached 1-to-1. Stop loss to break even. And let's see what happens. Now we're in Asia and we're stuck because Asia is just going to be ranging going sideways. This is why taking a trade around 7 p.m. is probably not a wise idea. But hey, let's just let it play out and see what happens. Do we reach target or not? Because at the moment it's a risk-free trade. And we hit target. Okay, so far not bad. Even in Asia, we made profit. We didn't enter in Asia. Our entry started outside of Asia, but because we traded late towards the day, we left the trade open. It was risk-free, and of course, it played out. But saying that, even though it's risk-free, we moved stop loss to break even because it was a new day opening. Brokerage slippages, uh, also things are happening in the background. The market closes and reopens might trigger your stop loss, so you don't know because it's being so tight. And it can happen. I've seen that situation happen. So ideally, you don't really want to be trading towards the end of the day. But for purpose of the video, I just did it anyway. Let's get another random one. And again, it's in the evening. I really wished it found trades during 11. Oh, still 7. You know what I'm gonna do? It's not helping, so I'm just gonna click it. I'm gonna choose a bar at 11. There you go, without me having to see what's there. Okay. Okay, so at this moment in time, the 10 a.m. candle is closing, let's see, bullish. And the reason I say bullish is because of the wick. That's quite a strong wick, so that's telling me that buyers want to step in. So for me to get a better confirmation, what I would do in this instance is I would wait for the 12 p.m. candle to be the same color in the direction I want to go. And there you go. So we completely avoided it being a fake out. You can see we're still bearish. There you go. We're bearish at the moment. Let's get rid of that. And we're hoping that price will continue to go lower. So what do we need to see? We need to see price break below here, but because it's broken above, we got bullish momentum at the moment, so that is telling me that we need to wait. So unless we break this low here, it's gone quite bullish at the moment. So at the moment we're just waiting to see this low being violated, which it never came. This is why we wait, because at this moment in time things are looking bullish at the moment. So now that our bias has changed, we wait for the next hourly candle, which is at 1 o'clock, which is there. We wait. Okay, so what has happened here? We have got bullish momentum initially with a wick to the downside. That's telling me that we still want to go, lower. So my bias has now changed again to being bearish. So Either I'm going to be waiting for the next hourly candle, which is at 2 o'clock, or we would look for a buy based on this candle. But at the moment, you can see that unless price breaks above, you can see where the whole move started, which was here. It's quite a big candle there. Everything else is internal. I'm not interested. I'll just wait. There you go. See, it's broken above. So it's broken above that. If that was the case, that it did break above that one, then you, because in 1 minute moves so fast up and down, you might have had a buy stop, something like this, because even though we went bearish for a bit, your bias was still bullish based on the previous candle, and all you're looking for an entry. And at the moment, you can see that price did go in that direction. And at the moment, 1 to 1, it has hit. Let's move it to the break even. Risk-free trade. And we got tagged out. Okay, so let me just check. What did it go up to this time? So far, this strategy isn't hitting 2R, but it is getting close to a 1.5R to 1R so far. So those of you guys that are watching this video, if 1.5 or 1R is something that you're looking for with a higher win rate, then that could be something you incorporate in your trading plan. Okay, so again, I'm going to look for a random one at let's have a look. Start at 10. Okay, at 10. The 10 a.m. candle has just opened up. And what we're looking for at the moment, price is trending up, wicks from the downside going towards the upside. We did get a bit wick there, but price is trading up. So I'm looking for bullish entries. At this moment in time, price is clearly internally trending between this external high and low. So if we really wanted to enter this trade on a bullish perspective, it looks something like this. But stop loss would be huge though. The 1 minute. You can see it is huge. Or we just wait till it breaks and then we look for another entry. We have broken, you can see. And let's see if price did hit a 1-2. Not quite. So let's just wait. If it hits it, then we move to break even. Price is going higher. Like it's frozen a second. Yep, it has frozen. So yep, it did freeze. Price didn't quite reach a 1-to-1 yet, so we're still in the trade. Okay, so we got stopped out. We didn't move to break even because price was consolidating sideways for a bit on the 1 minute chart. We got stopped out in this time. We're in New York session. Price is bearish. We're looking for bearish momentum. Price has just opened up, so we're looking at the 5. This candle here is bearish. The next hourly candle is about to open up. So that means one or two options. Either we continue to the downside or we wait for the next hourly candle to open. So let's mark out the internal, let's mark out the swing high, swing low, which is here. It's already taken that, so if you want, that would be an entry. Stop loss above here, and 221, something like this. Or we wait for the next hourly candle. And you can see price stopped us out in this respect. So looking back at this strategy, we want to wait for the start of the fresh hourly candle forming. We don't really want to be taking it halfway through because it looks like we'll get stopped out. So now that we've got that and we got stopped out there, let's keep this on. Let's see if we can try and make this back. So at this moment in time, we've got a bearish kind of previous, but we've got bullish momentum coming in. You can see clearly what violated this high here. Obviously it violated that. Where did it start from there? So there you have it. And what we're going to do now is we're going to place a buy stop there, and let's enter the trade. Oh, and let's see what happens. Okay, price broke below. The next hourly candle is here. I'm no longer interested right now. I'm just waiting because this has been violated. Okay, so where we would only become bullish when buy still bullish if we break above that. And we'll play a stop loss below here. Continuation. Can we get that? Oh no. Yep, we're tagged in. New hourly candle is forming there. And you can see we got stopped out. So here is a prime example of me entering again on halfway through the current candle, and we got stopped out. So based on this, so far we have to make sure that we do not enter a trade halfway through the candle formation. We need to wait for a fresh one to open. So had we waited for a fresh one to open, which happened about there, what's our bias at the moment? You can see we've closed bearish at the moment. We've got wick on the upside, we got wick, okay, we got some wick rejections here. This is a 50-50 candle, but if you decided at this point that we are bearish, then what you're looking for is very simply looking for this low to be violated, and to do that we'll wait for a sell stop there, and we go to the downside. And you can see that price did violate it, but now our stop loss is going to be actually in a much more bigger position, which would mean target would be a lot more. If we were bearish, and you can see we got stopped out there. So back testing this strategy so far, my humble opinion is if you can catch candles in continuation formation, it will work great. It looks like if you don't and you get stuck in consolidation, you are going to get a lot of losses. 2 to 1, I haven't really seen it hit consistently. It has hit a 1 to 1 or a 1.5, but a 2 to 1 hasn't been so rare. And personally myself, it isn't something that I would use to trade with. That's my humble opinion. So There you have it. Try it out, see if you get better results. But personally, myself, I wouldn't be using it.